Hello, everybody, and welcome back to OAG's latest webinar from wherever you're joining us in the world today. We're going to look at Northeast Asia this morning from the UK, and really just understand what the position is in relation to, is this a market that's back in growth, or is it still recovering from those events all those years ago back in 2020? To do that, I am joined by an interesting collection of speakers today. First up, John Grant. As ever, John, welcome to the panel.
Thank you, Deirdre. Good to be here in person, not as a chatbot, not as a pseudo LinkedIn personality, but as myself. So good to be here. And I think this is a fascinating subject when you look in detail what's going on around Northeast Asia. It's just a mess. But more of that later.
Yeah, more to come. Now, we're also joined this morning by Gary Bowerman. Gary, welcome back.
Hi, Deirdre.
I think it was September last year. I can't believe it's been so long since we were joined by you, but we're delighted to have you back.
Thank you.
And looking forward to hearing what's to come. And we're also joined by a new speaker this morning. We've got Professor Dr. Wolfgang George Arlt, welcome, who is doing a good impression of joining us from Australia this morning, having some camera issues, but you thought you would turn it on just to say hello. Welcome, Wolfgang. Delighted you're here today.
Thank you very much for having me, and sorry that I appear upside down. Well, probably you better concentrate on my voice instead. but anyway, happy to see Gary. We shared a book project, and of course I'm happy to.
And another one to come, Wolfgang. Another one to come.
Another one to come. Indeed.
Oh, that sounds like a hot off the presses. Goodness, well, maybe you can tell us a bit more about that as we go on. Okay, well, let's jump back into the slide deck for a minute. So, we told you that we're going to talk about Northeast Asia. Really, as we're getting into peak IATA summer season, we wanted to take a look at how some of these biggest and busiest aviation markets in the world are performing. So we've taken quite an in-depth look at capacity for China, Japan, South Korea, and some others, and the interdependency and reliance that these markets have on each other, and primarily on China. Wolfgang has in-depth experience of China, so we're hoping, and actually is just recently back from a trip there, so we're hoping to tap into some of those insights. And Gary, of course, has broad experience of Southeast Asia and beyond. So yeah, I think we'll have some interesting discussion this morning. And essentially, we're asking that question, what is, it's clear from our analysis of the numbers that this is a region that has not yet fully recovered. Will it recover? What's holding things back? What does the rest of the year hold for China outbound? We've spent years asking that question. When will Chinese outbound travellers return? So I suspect we'll have some interesting discussion about that this morning. We'll take questions as we go. Usual format. Please use the chat function to ask your questions. And yeah, let's step on to our first chart. As usual, for those of you who are joining us for the first time, I should have said my name's Deirdre Fulton, partner at Education. We normally have a bit of a global overview, and then we dive down into the details. So this is our sort of line in the sand. Look at capacity, what's happening. We're seeing it's a positive picture, I think. I think you never quite know what's around the corner in this industry, but essentially we're seeing the yellow and the dotted projected capacity for summer up 3.7% this summer versus the period before the pandemic. And domestic capacity, of course, driving that. And if we strip that down, the Chinese domestic market is growing great guns at the minute, so that's behind some of this growth. International, though, holding its own now, finally above that historic benchmark, and actually showing some confident signs of steady growth, I think, through the rest of this year. Fair to say, John? Anything to add to that?
Yeah, I think it's a glass half empty or half full type sort of situation.
Yeah.
You could be really optimistic and say, despite everything that's going on with Boeing, despite everything that's going on with Airbus and the engines, capacity is still up against pre-pandemic and last year. That's absolutely right. And there are some stellar parts of the world with really strong growth. And that's really, really positive. The domestic market, as you say, Deirdre, that's primarily driven by what's still going on in China. And I think it's just, Chinese market, as we'll discuss, is just stuck. It just doesn't know how to get its way out of the mess it's in. And that's going to be a real issue for them. So, it's good. So that's the positive side. The other side, of course, is you can always argue that that's only 3.7% growth against 2019. And normally we'd be looking at 3-4% per annum growth anyway. So we're probably minus 8 to 10% on where we should have been without the pandemic.
Yeah.
Assuming, of course, Boeing delivered aircraft and Airbus didn't have engine problems. But it's still, I think, a positive picture, and the results, certainly for the airline industry, for 2023/24 year have been exceptional. There's a sense that there's a bit of softening now occurring. Michael O'Leary described it as a bit more than that, but there are some carriers who are struggling in the US domestic market, particularly the ultra low cost carriers. And in Europe, whilst I think the big three legacy and low cost carriers are performing very well, I think the mid-tier, those trapped in that corridor of uncertainty, and partly state-owned perhaps, are not going to have such a great year this year as they did last. So it's a mixed bag. And then, if you look further afield, you look at Emirates giving all of their staff great bonuses for their outstanding results this year. Singapore Airlines performing well, Cathay bouncing back. Yeah, the world's looking in a much better position than it did this time last year.
Goodness, that's upbeat, John, coming
It's sunny.
coming from you.
It's sunny.
Yeah, the sun must be shining where you are. It's not where I am. Anyway, it's interesting. We took a little bit of a look. We haven't shown a chart like this for quite a long time. But you mentioned there's a little bit of uncertainty, perhaps. We looked back to March, and that's the sort of fainter line here at what carriers were planning in terms of schedules for the summer season. And then again in April, and then again the thicker line here is where we are now in May on both fronts. And there's a bit of softening, certainly domestically so far. International, as we said earlier, sort of holding its own. So a bit of a mixed story, really. And I think to some extent, perhaps this is muddied a little bit by what's happening in China in terms of domestic capacity, which fluctuates a bit anyway.
Yeah, I think we've for most of the markets, carriers who've been affected either by non-deliveries of 737s or Airbus issues have finalised their summer programs and are set. They've got either the aircraft they've leased in or retained aircraft in their fleets, so they know what they can operate. But what we are beginning to see, which is influencing capacity in some degree, is airlines beginning to adjust strategies in light of the changing market conditions. And I think there's no better example of that than the US market at the moment, where you see JetBlue and the Spirit merger obviously not being approved. So JetBlue now looking to a new strategy and a new future, and dropping some of their transatlantic flying for the winter, leaving Gatwick completely, reducing frequencies elsewhere. And I think that highlights a couple of issues really. What is the future for that mid-market, not high cost but not low cost carrier on transatlantic services, even with a single aisle aircraft and the most efficient aircraft in the skies at the moment? Are they trapped? Can they operate year round? How do they move in the market? Where do they get the frequency? I mean, I think they started services to Edinburgh yesterday. I mean, how sustainable will that be through the winter? So I think we're seeing some airlines have to pivot and transition strategies, and that's going to impact capacity. And I think we can't ignore the geopolitical issues that continue to impact some parts of the world, and they are going to continue, I think, for a couple of years. Bit more tension at the moment in Southeast Asia, of course.
Yeah. Okay, thank you for that, John. Coming back then to Northeast Asia. So the positive, certainly, is that capacity at regional level is now above 2019. And here we're taking domestic and international together. And for the year to date, we're sitting almost 5% above 2019. And of course, a much stronger, here's the positive PR, up 13% on 2023. But we all know that we were still seeing, a bounce back from, if we had 2022 on here, there would be a very, very low figure here. So positive certainly at that level. And we're sort of expecting that capacity is just going to continue at that level. Taking account of your earlier point, John, about, if we'd had 4 or 5 years of growth, this number would be significantly bigger. But we are where we are, aren't we?
Yeah, we are. And, it's not in these numbers because it hasn't happened. But take China as an example. Should have received probably about 50 737-800s by now for the year across all its airlines. They've only had 24 deliveries year to date, and they've now suspended any more 737-800 issues because of a concern over the cockpit voice recorder and the battery, and whether it is actually effective enough. It's supposed to run for 24 hours, and they've got some concerns about whether it's capturing 24 hours of data. Whether it is or not, it could be one of these political disputes, wrapped up in aviation. But they've stopped more aircraft deliveries. So
that's an issue, isn't it?
Yeah, that capacity number is, maybe a little bit understated as to what the real world would like, or what the Chinese would like, at least.
Yeah. Okay. Let's go down a little bit further then. So looking beneath that sort of top level trend then into Northeast Asia, and we've pulled out just the major country markets here because the slide would have been way too busy otherwise. What we've got, top chart here, is domestic capacity, and we're just showing you the picture back 5 years and then versus last year. And this is just for May, just a sort of representative figure. But actually, if we look at the year to date, the trend is very similar in terms of percentage change versus 2019. So it's clear here of the sort of different stories that are emerging. Obviously, you've got China demonstrating strong domestic capacity growth, and that's kind of consistent with, accepting the periods of lockdown that we saw. The domestic market was growing strongly, or recording strong growth, and continued to do that other than when markets were constrained by lockdowns. So that appears to have sort of got back, and that's a pretty strong level of growth by comparison to even other global domestic markets. India's probably approaching that. I think 11-12% capacity growth trending at the minute. So but pretty strong up there. Different story in Japan. So struggling really still to get back to 2019 levels. And there's a question, I guess, as to whether that will happen. I'm seeing some chat about resources in Japan, which is an issue, as we've acknowledged, everywhere. But we know that there are other constraints in Japan, and I guess we'll talk a bit about some of those. South Korea and Chinese Taipei further behind domestically. So still some challenges there in these markets. But
in the context of China, you know, we understand, and we saw that dramatic flip of capacity from international to domestic in 2020 at the beginning of the pandemic. Everyone being as much as possible encouraged to travel domestically, but that's 15% capacity growth versus 2019. At the same time as more and more high-speed train capacity is coming online. And the one thing we know about domestic flying in most parts of the world is that it's great for generating revenue, but it's absolutely rubbish for profitable services. And it's that trap that has got the Chinese carriers completely and utterly caught at this moment in time. How do they stop and wean themselves off of this domestic growth that is, quite frankly, valueless, but as Wolfgang will tell us, doesn't really matter because they don't need to be profitable, and return to international flying when demand is very much one-sided, if there is any, in terms of outbound. There's very little inbound demand to China at the moment. And it's, you know, it strikes me that China, however it's managed to do it, has got itself in a real pickle and doesn't know how to break out of it at the moment, particularly when 80% of their costs are dollar denominated, and yet all they're generating for most of their routes is Chinese yuan. I mean, it's a mess. Gary, Wolfgang, what do you think of it at the moment?
I think you're spot on. I think one of the problems that you talk quite cryptically, Deirdre, about those events a few years ago, and I think it's quite difficult to understand just how much of an impact it had on the psychology of China, those 3 years of being closed down on the demand and the supply side. And so what we're talking about now is we're not really comparing like with like. If you look at the supply recovery and the demand recovery, the patterns are very, very different than they were in 2019, 2018. Even if you go back a decade, that surge of outbound growth, even the domestic patterns of travel are quite different at the moment. And I think we're going through a period of just pure realignment where the patterns are very, very difficult to predict. Forecasts are almost irrelevant at the moment. You really have to look at it month on month. Had a pretty strong first quarter. Northeast Asia, Southeast Asia generally tend to have strong first quarters. There's a lot of public holidays during that period. We're now going through a bit of a fallow period, May, June. We've had the May holiday in China and Japan, but we don't really have much big holidays now. You have the summer school holidays, and then you have October. So this is a kind of a period where we'll really see the filling in of those gaps between the big public holidays, which drive travel activity. I've said this for since 2020, that I don't think we're going to really understand how these markets are recalibrating until we have full year 2024 data. I think month on month at the moment, we're just going to keep seeing different patterns of change. And some of those comments that, about in Japan, you have resource issues, but you have those otherwise. You have different issues in different markets because they opened at different times. And consumers are responding differently in different markets. It's really, really a mixed picture.
I'm not sure. I absolutely agree, Guy. I'm not sure that we'll even fully have the answers when we have full year 2024. Actually, I think your point about this being a market that's in flux is really valid. Somebody, Julian's pointed out in the comments that May 24 is lower than May 23 in China domestically. It is. It's down by 1%, and I think that is just reflective of the challenging conditions in China economically. Wolfgang, you were there just last week, and that's certainly about yesterday.
Yeah, no, I'm first, of course, I agree with what Gary also just said. Uh, this is a new ball game, so we have to relearn what is happening, and it's we cannot go back on the experiences we had pre-pandemic. And in China, certainly. So I've been traveling there since 1978, quite some time, and especially since the 1990s, there has been a underlying feeling of optimism. So people were convinced life is getting better year by year. You can spend your money because more money will come next year. If you were in the real estate business, you could sell apartments with a profit all the time, and people were happy spending and happy to be seen spending a lot. This has completely changed. Now it is people are more cautious. It's all about value for money. So if you want to brag, you're not bragging anymore about how much you spend, but how clever you are in spending less, or get at least getting exactly what you want for your. Oh, sorry, sorry, a bit of cold. Getting exactly what you want for your money, and so therefore clearly Chinese people, of course, they want to travel after the pandemic, but this is domestic. Yes, there's a lot of domestic tourism. But also, one of the things which has changed is that in the years of the pandemic, also the affluent Chinese people had to stay in China, and the domestic tourism industry has reacted
Mhm.
by really improving their services, and so now domestic tourism has become a real competitor for international destinations. Where before the pandemic, for rich people, if you were traveling domestically, you were either not really rich after all, or you were too stupid to or didn't not brave enough to go to an international travel to a foreign country. Now this is something where it is a patriotic act to stay in China, and there is much more and much better offers than there were before. So that is something, one of the aspects which has changed. But I think the basic point is that people understand that China is in a systemic crisis, and this is not just something which will go away in 6 months or something.
Mm.
China
Yeah.
has reached a
I would
level
agree with that.
of
I think a lot of the conference talk recently in Asia, Deirdre, has been about the fact that the May figures generally, domestically and internationally, were very disappointing this year. I
Yeah,
think there was
yeah,
a lot of bigger expectations. And I think when we look at China, we always look at this big aggregated market, the mass market, the big numbers. And as Wolfgang said, it's a very, very big, very, very complex market. You know, I've been traveling in Europe recently. There's a lot of Chinese that are traveling that can afford to travel. But when you look at the aggregated larger part of the market, the economy is struggling. And in April, for example, national fiscal revenue fell nearly 4%, 3.7% year on year. And that was after 2.4% back in March. You can see that the economy is having big problems, and that is having an impact on consumer spending for sure.
I think what's interesting. I'm going to just go into this slide. We've got a couple of slides about the domestic market, more in terms of the sort of metrics and size of operation, but that sort of resonates, I guess, with what you're saying. So we took a look just at there's a analysts like to categorize Chinese cities into tiers. And you've got the very big cities, which are your over 20 million population, obviously Beijing, Shanghai, Guangzhou. You've then got this sort of secondary first tier, new first tier, which are emerging cities. Well, they're not emerging; they're established by Western.
Established with 10 million
Yeah,
population.
You know, 5 to 10 million populations in growing, Chongqing, Tianjin, Chengdu, etc. And then tier two, which are a little smaller but still substantial.
So
Probably,
you mean like London and Paris?
yeah, no, probably the population of Scotland, and then
They're bigger
everything
than
else.
that, Deirdre.
But you know, in all seriousness, the point really was to just look at you know, how capacity is distributed, across across these cities. So this is absolute volume in terms of the market. And then the growth rate in those different areas. What's really interesting is that growth is absolutely concentrated. So this is versus 19 in the yellow, and then versus 23 in the grey. That the growth that is happening, there is some growth in the domestic market year on year, but it's only happening in those tier one cities.
But this is interesting because this is, and Wolfgang would love some of this at the moment. This is a factor of gravity, isn't it? You know,
Yeah.
the gravitational pull to tier one airports, and what we're seeing is additional capacity that we know has been coming online in China in terms of airport expansion, new runways, completely new airports, driving that additional capacity and allowing for more services. And those services are predominantly from tier 2 to tier 1. And that is why you're seeing that. And I know we've got a slide about Beijing Daxing in a moment, but you know, there is an airport that became the number 2 airport in Beijing 5 years, maybe 6 years ago now. And it is the original intention of that airport was to be an international to international hub with some Chinese connectivity to international services. It's a domestic airport with very few international services.
That's evident.
And maybe if I may add to that, it's also clear that of course not all this domestic flying is leisure. So a lot of this is of course also business, and therefore tier 1 cities is where the big companies are, and they are creating this traffic. And the second thing to see is that for the most of the high net worth individuals live in the big cities, obviously. So for people who are having I don't know, $500,000 on their bank account or more, they can still afford to fly. So this is their consumption pattern will not change on spending a few $100s on a domestic ticket. Whereas if you go down, so the people who are still having more money than the majority, but not so much money, for them they will start to think about, okay, maybe I don't have to take this flight and I can save some money. And so that is something which comes into the picture, because I think what is important to understand also for the international market is, with the slowing down of the economy, you will have less newly rich people. So the people are able to climb up the ladder and reach the point where they can afford to travel internationally, or moving from being able to afford to travel to Thailand to being able to afford to travel to Scotland. That this dynamics is slowing down because the economy is slowing down. So therefore, and that also I think is clearly putting more emphasis back on the tier 1 cities, where before the pandemic we were seeing the tendency that the non-tier 1 customers were growing in importance also for, let's say, Europe. This is a trend which you can see is reversed.
But you also, I mean, it beggars belief that with the growth in high-speed train and the efficiency of the high-speed train services and the connectivity to Hong Kong, and I think both of you have used Hong Kong Station to get into mainland China recently.
Last week, yes.
It is, high-speed train services are very efficient, and they tick all of the environmental boxes compared to the airlines. And yet Chinese airlines domestically are charging the same fares as for a high-speed train service. Now, that is just madness. An airline classically has a much higher cost base per flight and has to charge much higher fares than you would get for a domestic train ticket. It never happened in the UK, I mean, but that's another story. But how can we have so much air capacity competing with high-speed train services with the same fares? In Europe, airlines are getting out of those short haul domestic sectors because they cannot make money and they're not environmentally sustainable. And the slots can be used for more effective things such as international flying. And this blockage and this reluctance to change is going to end up badly damaging Chinese aviation and Chinese airlines for the next decade because they're trapped.
Yeah, I think the point that you made about the cost and benefits is the same for the railways. I mean, the railways don't make any money. I mean, they're hugely expensive, but the value perceived by the government is it's the social value of having this network that connects the whole country of all the tiers. And I think the interesting point that you mentioned there, both of you, about this gravity at the moment in flying, whether it's leisure or business, is absolutely true in the current state that the economy is in. But if you look at where the growth is in terms of some of the rail traffic, that would probably be in the third and the fourth tier cities. The great hope of consumer brands, of the travel industry, has been for many, many years the third and fourth tier cities, the next wave of growth. Now, COVID has really hammered that, has really hurt it. But it is actually having some impact on domestic travel. The Chinese OTAs, the Chinese hotel brands, they really spent a lot of investment, time and resources during the pandemic trying to grow their customer bases in third and fourth tier cities. But the lag for that actually having much benefit, particularly on the international market, is going to be considerable. So, a lot of the work is being done, and you may see this next wave coming, but not at the moment because of the state of the economy.
And in some ways, Gary, and to pick up on your point, Wolfgang, about domestic tourism now becoming a competitor to the outbound market. We saw a sort of raft of development pre-pandemic from second tier cities across China into secondary cities, some primary cities in Europe and North America, and other parts of Asia. Much of those services have not yet come back. And the concentration of growth has really been from those bigger cities in China. And I do wonder to what extent that competing domestic tourism product and, as you say, significant hope and development of those markets down to the third and the fourth tiers is going to continue, I think, to impact on that.
So I totally agree. Totally agree. And I think that goes back to my earlier point that we're not just seeing a market regrowing, we're seeing a market reshaping. And it's such a huge market that, this realignment that we're going to see will have huge impact and resonations over the next decade. But it's still a nascent recovery.
But the thing there, Gary, is it's not about China. It's about all of those countries in Asia and the rest of the world that had become reliant on Chinese international travelers. How do they backfill all of those hotel rooms? How do they refocus their markets to where there is going to be more demand? Places like Thailand still holding their breath, waiting for the Chinese international traveler to return and expecting the volumes that they had in 2019.
Well, let's go to that slide, John, because it's really evident that there are still those big gaps, and there's kind of a wider thing for me here, and this came out of something we were talking about with Wolfgang just the other day. That actually, have we seen, if you think about the classic growth curve, and apply that to China's outbound growth, has the peak passed? Have we seen peak growth? And now we're just about a mature market. You can see we've gone back to 2000 here, just looking at total China international capacity, and you can sort of see the massive upwards trajectory taking us up to 2019 there. 10.7% annual compound annual growth rate for China outbound, and you can see this just looks at the regions that contributed to that. I think we're fooling ourselves if we think that growth trend is going to continue in that kind of trajectory going forward. And will we see that back up to even that level by 2025? I don't
know. No,
so.
We won't. And I think we need to, if we go back, to 2018-19, well, in fact, from 2015, there was a level of international capacity growth from China to selected markets around the world that was just land grabbing, quite frankly, with no real demand, with very little ability to create demand, long haul sectors being flown with 45, 50% load factors by Chinese airlines that were never going to be profitable. The number of, carriers that were flying from China to Australia, I think it was about 12 or 13 at one time, all fighting for a piece of the action because they had new long-haul aircraft and they were going to fly them somewhere. We had Junyao Airlines who started flying into Europe, and we had Hainan who were flying lots of international services into Europe. And apart from the student traffic and the resultant VFR traffic that followed those, there was very little corporate demand and very little year-round demand. So at that point, we were in a period where we were just growing for the sake of growing, and it was about nationalism. It was about showing the Chinese flag around the world and all of these things, and the land grabs, because their aviation policy was one carrier, one route. So airlines were just going for it.
And, I think Jonathan makes an interesting point in the comments about those Tier 2 China City international flights only worked when there was government subsidy, which is the point you're making.
Yeah.
So arguably, from a sort of economic perspective and a sustainability perspective, a reset is no bad thing. Having markets that actually work.
We know, British Airways are famous for many things in the airline industry. One of the things they're infamous for is their Chengdu experience, where, they started flying to Chengdu, World Routes was hosted in Chengdu, and BA were being paid a subsidy of millions of pounds, millions per annum to fly that route. And the BA network planning team might as well have bought the signage back from Chengdu when they left the conference, because they dropped the route the week later. And that's a tier, and there's many examples of that where airlines have gone in and European carriers are just as guilty, taking the subsidy and not being able to create a market.
Yeah, and the economic conditions have changed. The government's debts are too high, so they can't afford to pay those subsidies anymore. But as you said, the demand patterns weren't there anyway. Most of these routes weren't successful. They weren't profitable. They were experimental attempts during a growth phase of a market. That period has gone now. We're not going to see those coming back.
But I would say, from the point of view of the smaller airlines, well, this is China. You have all these contradictory things happening at the same time. From the point of view of the smaller airlines, of course, they have the interest. I flew this time from Sichuan Airlines from Cairo to Chengdu. So Sichuan Airlines is obviously, in all communication, very eager to expand their network deeper into Europe as well. But the other point, which was only briefly mentioned in the beginning, is in this aircraft from Cairo to Chengdu, almost all the passengers were Chinese, not Egyptian. So what is the much bigger gap is the lack of foreigners going into China. So it is so, and of course the aircraft goes in both directions. So this is something where you can see that China is not very successful in bringing back foreigners into China. Partly, again, business. A lot of Chinese companies are moving away from China, or at least limiting their engagement in China. And so I saw some figures that the numbers of foreigners in Shanghai have halved since the end of the pandemic. And so that is the other point, that there will be still airlines running below capacity, just for showing off that they have a connection to London or to Frankfurt or whatever.
Well, Wolfgang, at the moment, there are two, and I've got the data here because I can't believe it. I mean, it's just ludicrous. There are 2 flights a day from Shanghai to London Gatwick. Now, London Gatwick is my nearest and dearest airport, and it's done a great job at developing long haul services. But it has 2 daily flights from Shanghai to London Gatwick. The first leaves with China Southern at 5 to 1 in the morning, and then half an hour later, Air China follow them on exactly the same route with an A350 versus a 777. 2 flights from Shanghai to London Gatwick, as well as Heathrow services, arriving within 20 minutes of each other. Come on, guys, let's be serious. There is nowhere near enough demand for those services. That is just artificial posturing by the Chinese airlines. It's grabbing. It's got no commercial sense whatsoever.
China is not about business. China is about politics.
Mm-hmm.
And then politics, and then politics, and then business.
Yeah, and the point you mentioned about whether we'll ever get back to those figures, Deirdre, I think it's really interesting. And the case study really in Southeast Asia is Thailand. Thailand had 11 million Chinese visitors in 2019, and it knows it's not going to get anywhere near that this year, probably not next year. And as you say, will it ever get back to that level again? Was that just a specific market circumstance in 2018, 2019 that worked in its favor? There are so many different patterns of outbound demand now. You could see that more Chinese in future will go to the Middle East. Northeast Asia is still very, very popular. Has Thailand had its day? Maybe it has, maybe it hasn't. Thailand is still working very, very hard to draw back Chinese travelers. But the key phrase used by most destinations in Southeast Asia at the moment is market diversification. They know they were too reliant on China. Yeah. They need to attract more travelers from different markets, and that's what they're trying to do.
And it's a reset in that market as well.
Yeah, totally.
I think the point about the Middle East is really interesting because
and I think again it depends on your perspective. So for aviation, you don't really care how long people stay in a destination, but for the destinations, of course, it is the alternative to having more arrivals is to have the people who come staying longer. And as we can see now, we have a growing group, for instance, of best agers, so 55 plus or 60 plus people who do not have a grandchild because their daughter refuses to get married and refuses to become a mother because they were, as a one-child policy child, much better educated, are much more self-confident now, and they don't want to be a mother and wife in a macho society like China. So therefore, we have more older people who have time and money to spend for themselves, which would normally would have gone to the grandchild. And so these people travel not for 6 or 7 nights; they travel for 2 or 3 weeks. So that from a destination point of view, the problem is for this segment is this is a positive development because these people will stay longer and spend more money. From an aviation point of view, there's not much difference. It's still one return flight. So therefore, I think this is something we have to be careful what we are looking at. And also, these unmarried ladies, they will also have more money to spend on themselves, and they will travel with some girlfriends group internationally. So that is probably rather a positive development.
But one of the big lessons that we never learn is we all become complacent with what we see and what is happening. So in the whole of the remainder of Southeast Asia, saw this great 20-year swathe of international visitors from China. To your point, Wolfgang, every year was bigger and bigger and better than the previous year. It was never going to stop, and therefore everyone became completely reliant on that and didn't have any desire to diversify their markets, to grow new segments, because it was just milk it for everything it was worth. And now it's just caught up with us, quite frankly.
And I think there's a lot of hope in Southeast Asia in particular, and some of the same mistakes could be made. That the next great hope, the next great market is India coming into Southeast Asia, and you could well see some of the same mistakes being made on repeat that they made with China.
And India, whilst India has the biggest population in the world now, it still has very, very, very low levels of income. GDP per capita is $2,500, which is nowhere near making air travel internationally affordable for great swathes of the population. So yes, I think
and a very different airline structure as well.
Yeah,
Yeah.
there's
but I
markets
think
to come, but
the key point is we really don't care about averages. We care about rich people, and the point is there are much less rich people in China, in India, than there are in China. So
yeah,
when we talk about long term, long distance flights, we talk about 100 million Chinese people who can afford to fly from China to Gatwick. In India, we talk about 20 to 30 million people who can afford that.
yeah,
It's very simple. If you look at the numbers, uh, the wealth is much more concentrated in India in fewer hands than it is in China. So therefore, I think this hope that all of a sudden the Indians start to travel like crazy, that will not happen because simply the base is not there.
I think that's I
Yeah.
think that's why the Indigo. I think that's why
They have a lot of other problems with dietary restrictions and stuff like that.
Mhm.
So
And
which the Chinese
I think that's why the Indigo
okay.
proposition works very, very well, though. You know, they have got. I love this statistic. You know, there's a new aircraft arriving every week for the next decade.
well,
Um,
expected to arrive.
expected. They might be a little delayed,
Yeah.
but theoretically, that's the volume and the scale of the order. And these aircraft are primarily extended range A321, so narrow body aircraft, low cost, low cost product. But the range means they can serve very many more destinations in the region. You know, 6 hours flying time, a little longer, I think. So that product is like the ideal fit for the market, isn't it?
Well, it is until it gets to the point where that one-way sector becomes about 7.5, 6.5 hours, when suddenly you then get into crews having to night stop and the cost increasing phenomenally of your operation. So I think that's that always needs to be considered in that context. If you're flying from India to Europe, then you could use an XLR because you're going to get better yields, and there's an established market that you can tap into, and it's bi-directional. It goes both ways. I don't think that's going to be the case with some of the destinations that you're talking about in Southeast Asia. I think that will be very different. You know, it's going to be one-way traffic. But we touched on the Middle East and the whole Saudi Vision 2030 proposition. And Chinese visitors going to Saudi Arabia. I mean, there's a fundamental question: Will you create a market from China and Saudi Arabia? Well, there's product that could be interesting. There's no doubt about that. But in a country with economic hardship, even allowing for millions of people, are Chinese tourists going to pay for 6 and 7-star hotels in Saudi Arabia, where the room rates can be up to £800 a night minimum? Is there enough of that to happen? Or are we once again creating a bubble that will burst at some point? Is the Saudi Air Connectivity Program, which is funding all of these 3 Chinese airlines flying to Riyadh, is that too much capacity too quickly?
Yeah, I think your point is valid. I think the distance naturally filters the market. I mean, you see that the Chinese OTAs always talk about the 4 to 5 hour flight radius from China, which incorporates Northeast Asia and Southeast Asia. And in the first quarter of this year, 78% of outbound travelers stayed within Northeast Asia and Southeast Asia from China. That's 8 out of 10. Now, that's probably slightly lower than it was pre-pandemic, but it's still 8 out of 10 travelers. And that's for the reasons that you've both said, is the short flight time and the short duration of stay. Tends to be, on average, 4 to 6 days at the most. As you go further, then it changes the whole economic dynamic of the length of stay, the budget that's needed, the time for the flight, all of those things. And that's a small portion of the Chinese market right now.
I think what we will see is in all markets in the economy, we will also see here, which is a split. So you have the upper end of the market, the really rich people, and they will be very happy to go to Saudi Arabia and to Qatar and to stay in 6-star and 7-star luxury accommodation. And they will be very interested in the new things, NEOM and other new things coming up, especially in Saudi Arabia, filling the 105 new Airbus they have ordered. Uh, and on the other hand, you will see people more careful with their money and staying within the 4-hour radius. And don't forget, at the moment, the numbers we have now, we are back to a situation where more than half of all the trips, all the border crossings, end in Hong Kong, Macau, and a little bit Taiwan. So basically, Hong Kong, Macau. So we were down that about 45% were going to Hong Kong, Macau, and 55% going real international trips. This is not, of course, not flying all trips. But now we see again that we are almost 60% of all the border crossings are just going to Hong Kong, Macau. So that is also to keep in mind. So I think there is a demand for luxury tourism, whereas luxury does not necessarily mean only 6-star hotels. So last week I did a workshop for the Egyptian tourism ministry in Cairo, and we discussed who is the most famous Egyptian living at the moment. It's obviously Mohamed Salah, playing for Liverpool, who's the most famous Egyptian in China. And so to organize a trip to his hometown, which is 100 kilometers away from Cairo, and meeting his family members and meeting a guy who, as a boy, played football with Mo Salah, and cooking his favorite dish and stuff like that. This can be a luxury product as well, because it's only limited to how many people can do that. So for this kind of things, doing exclusive things, either very expensive or very behind the scenes special things, on the one hand, and rather low price orientated on the other hand, I think this is something we will see in many markets. And to come back to what was just briefly mentioned earlier, yes, I think we see peak tourism, and we see peak China. So I think this is 2018-19. This will be the good old times we all remember, and so I think it will go down from here ever since the extinction of Homo sapiens.
Yeah, interesting. I'm still I'm just mulling over whether a luxury experience visiting Salah's hometown or a 6 or 7-star hotel in Saudi would be more appealing. I think I know what I would choose personally, but let's not have any more football. Let's not open the door to John having any football conversation.
Yeah, don't, Deirdre, don't.
I
You're
want
just
to.
you're just scoring own goals.
Okay, all right, okay. See, I walked into that one, didn't
Yep.
I? Or kicked my way into that one. I'm not even going to try football analogies. I've just got a couple of slides I want to show. I'm conscious of time. So we talked really about the reliance or the expectation, certainly in Southeast Asia, Gary, about that many countries have on China. But I think it's also interesting to see within the Northeast Asia region the similar pattern. For China, for Japan, China was actually pre-pandemic growing faster than Thailand as an outbound destination from China. And we obviously have not seen that market fully come back. And all of the one thing we haven't really talked about today is visa openness. We talked about that the last time we had a webinar on China. There's been a massive surge of visa liberalization that we've seen right across Southeast Asia. with many countries seeing that as a potential tool to try and rejuvenate the China outbound market, and it's not quite delivering. Similarly, we've seen China announce a huge number of visa-free or visa on arrival schemes. I think 40 plus countries, and that, I guess, is part of the desire to try to balance the the people on the planes. It's not just shouldn't just be an outbound market. Whether we see a noticeable shift of that or not, I think will be one of those things when we get to the end of this year, we'll be looking back on and reflecting. But I think the importance of China can't be understated for its neighbouring countries. And interesting to see just the profile, I think, of how some of these markets have recovered. You've clearly got currency issues for Japan. The yen is very weak, is very strong, and we're seeing the US markets in particular, which are fourth biggest for Japan, fourth biggest for South Korea, and indeed for Chinese Taipei, all holding up. In the case of South Korea, probably the strongest. Perhaps maybe some others here are slightly stronger, but doing exceptionally well by comparison to other markets. Vietnam too, strong growth there, into South Korea. So, it's a mixed story, isn't it? In terms of what we're seeing, there isn't a sort of commonality. I think they're all unique markets, aren't they, with their own sort of dynamics and relationships.
Yeah, they are, Deirdre, and I think you're absolutely right. And I think when you dig deeper, you find some quite intriguing things. I've got a couple of stats for you here that are pretty interesting. If you look at Japan, for example, Japan received 11.6 million inbound visitors in the first quarter of this year. That's up 4% on 2019. But it's outbound, only 3.9 million outbound travelers. That's almost 50% down. But you compare that to South Korea. So Japan, you have almost 3 times as many inbound arrivals as you have outbound. If you go to South Korea, it's the other way around. There are 7.42 million outbound travelers, but only 3.4 million inbound. And they're talking about a tourism deficit because you've got more people leaving the country than you've actually got arriving, which is the complete opposite to Japan. Shows you just how these markets are very, very different.
And Japan, of course, aging population, tightening economic position, and we were speaking to somebody in the market just a couple of weeks ago who was telling us exactly the same, that the balance between inbound and outbound has really shifted, from being sort of 60% inbound, 40% outbound, down maybe to 25% outbound, and that's a sort of systemic change really in the market, isn't it? That I think we'll continue to see ongoing impacts for that. And
again, is that again going back to our earlier point? This surge of travel to Japan that we've seen with the lower yen, but also just it's such a hot destination for travelers across Asia and also US markets as well. Is that just a return? Is that just the sort of reopening return, or is that going to be a longer term thing?
Yeah, I think
don't forget the effect of Brighton playing their pre-season.
Enough with the football references. There we are. Moving on.
Make a huge difference.
One final slide in our last minute that I just wanted to acknowledge, particularly as somebody, Ansgar, I think, raised this earlier in the comments. We all know, we mentioned geopolitical situations that continue, and we've talked many times before about the overflight issue, but this just, it's really stark when you look at the absolute variances. So this shows the routing that's being taken from Frankfurt to Beijing on a Lufthansa flight versus the Air China overflight of Russia, which obviously isn't happening with European carriers. Now, flying time for Air China, 9 hours 41, Lufthansa, 12 hours 11. So that tells you all you need to know about how challenging it is for European carriers in this particular market. We took also a look at the share of capacity that's operated by Chinese domiciled carriers versus others. And this is just showing how that position has changed. This is not the size of the market, it's just the share of capacity that Chinese carriers are operating. And it's significant.
And it's only going to go one way.
Yeah.
It's only going to go one way. European carriers have found better things to do with their aircraft, to deploy them on the US transatlantic markets, even to go down into Latin America and other points in Southeast Asia. This is a one-way direction of traffic. And whilst BA, Lufthansa and KLM need to keep a presence in the Chinese market, it's always going to be their partners that are going to be creating more of the capacity.
Yeah. I'm afraid we're kind of out of time. If anybody has any final parting shots, we could probably run over for a moment or two. Gary, anything in closing from you?
No, I think going back to, there's some really good discussions today, and I think what we're seeing is, as we said earlier, is this is a market. All these markets, Northeast Asian markets, are in recovery. We're not really moving into the growth phase yet. If we have this conversation another 6 months, I think we'll have a very, very interesting and a new level of discussion, because things will have moved on, new patterns will have developed. But generally, as you said right at the beginning, those events of a few years ago still impact this region hugely.
Yeah. We'll hold you to that, Gary. We'll have you back a few months' time, and we'll take stock of where we are. And Wolfgang, any closing thoughts from yourself?
Sorry. So from my side, I just saw the comments. Somebody asking the $1 million question: when will the full recovery happening? 2024 or 2025? And of course, I think we all have been asked this question many, many times. And the answer will probably be like we have been discussing the last hour. It's a wrong question. So it will not come back to how it was before. It will come back in a different way, and there will be some winners and there will be some losers, and there will be new demand structures, and it is not only, of course, the fight for the passengers. It is also I've been at a meeting with European airports. It's also the fight for attracting Chinese airlines coming back, and so there is again there will be some winners and some losers. So it's a very dynamic development, and so we have been living in VUCA times, volatility and uncertainty. And I think we have moved from VUCA now to Schumpeter, which is creative destruction. So we have to admit that something is gone, and we have to, in the Schumpeter sense, have a creative destruction and build something new. And those people who are willing to say, okay, it's a changed world, I have to change my business model. This will be the winners, and those people who try to keep the old way as long as possible, that will be the losers.
Well, thank you for that fascinating insight, and thank you, John. As ever, I'm sure we have lots to reflect on, and we'll be back with the next OEG webinar on the 19th of June. Thanks again to our speakers, and we very much look forward to hearing from you all again in due course. Thanks, everybody, and goodbye.
Thanks. Bye-bye.
Thank you. Bye.
Bye-bye.